I'm also curious, just in terms of culture, what do you think, who do you admire out there? And we didn't prep this, so I apologize, but who do you admire in terms of their culture, and what do they do that makes them so unique, that helps keep that very cohesive culture going?
Well, you go ahead, Larry.
No, I was going to say I admire Phil.
You're way too kind. I mean, you know, every kid coming out of college today, I'd say would most like to go to work for Google than anywhere else. Yeah. Why is that? Obviously, it's certainly helpful of having had a rising stock price the way they've had since they did their IPO. But I think it really comes back to this. When I was in business school, I read most of, why am I blanking on his name? Longtime business consultant. But he made a point that most every company argues that they have better people. And I certainly, over my years at Morgan Stanley and Tiger and elsewhere, have made that argument to prospective clients. But he basically argued that once you get past about a half dozen people, the law of large numbers starts to apply. So the real trick in business is not trying to figure out how you can have better people than everybody else in the marketplace, but how is you get ordinary people to do extraordinary things. And that's this, you know, that's what culture, I think, is all about. It's how do you get a team of people to do substantially more than kind of what some of those individuals have. And that's why I think people come together, and I think that's true in for-profit businesses, non-for-profit causes, even in things like religion. And when it stops working, you know, they scatter.
Right.
The two large organizations which come to mind, of course, are Goldman Sachs and JP Morgan. They're two firms that have navigated their way through these very choppy waters quite well. And if I were a kid coming out of school, given the uncertainties of the world right now, those are the two that would be the ideal firms to work for in this industry, because what they represent is a future. Whereas a lot of other firms, it's not clear whether you're going to have a future. It's not clear what that future will look like. At Goldman Sachs, at JP Morgan, I think you have a better sense of what that future will look like, and they're safer grounds at this point in time. Within the hedge fund world, Renaissance is the one that comes to mind. They've managed to continue to perform regardless of the market environment, at least with regard to their medallion fund. You know, my hat's off to them, and they've, as a consequence, kept their people in place for a long period of time.
What will things, I mean, we did our own sentiment indicators, it was the collective, but what's your sentiment for the year ahead? Where do you think things will be a year from now? Are you bullish, bearish?
From my perspective, Armageddon is no longer on the table. I think the best case scenario here is that the focus of the markets starts to move based on a country-by-country analysis from the world's coming to an end to we got to start worrying about inflation a little bit. And the central banks are all on notice here in getting ahead of it. They know that the measures that have been taken have been nothing short of extraordinary. I can't begin to commend Bernanke enough for the actions that he took during these unprecedented times. No other central banker in history has ever done the things that he's done, has ever been as aggressive as he's been. And maybe he needed to do that because you can't take short-term interest rates below zero, but I think we need to give him an extraordinary amount of credit. Now, monetary policy works with a lag. As a result, you see both sides with a lag. And even though they went to these extraordinary measures, we still had back-to-back approximately 6% down quarters in the fourth quarter and first quarter of fourth quarter last year and the first quarter of this year. At some point, you know, all of the fiscal and monetary stimulus is going to become inflationary, and the central bank needs to get ahead of that. So the big question around the world that we're dealing with at this point in time is, where are we in that cycle?
What did you say when we typed in our number? What was your inflation number?
My inflation number was 3% 3 years hence.
Okay,
I had a problem with the 3 to 8% category because, open and honest, I would probably not sleep very well if inflation was going to 8%.
What was your inflation number?
I actually put 3% as well. I think one of the more interesting conundrums is you know, we're clearly in a global environment where there's dramatic overcapacity and way more supply than demand right now. Yet the deficit spending, at least in much of the developed world, you know, is everybody has the fear that that's going to lead to substantial inflation. And it's really the transition going from one to the other, to me, that could be very messy.
What were your S&P targets?
My S&P target was 1166. I figured nobody else would put in that number.
Let me point out one other thing, Laura. Someone was making this point to me a couple weeks ago that, I mean, I suspect, like me, everybody in the room kind of remembers where they were on September 11th, 2001. But do you remember where the Dow was closed the day before on September 10th, 2001? It was at 96.52 and change. And do you know where it was on September 10th, 2009? You know, roughly a month ago, 96.52 and change.
Wow.
And you know, in 2001, we were just kind of coming out of a recession. You know, unemployment had risen. They were talking about it as being this, you know, kind of jobless recovery. Sounds a lot like the period we're currently in. Yet today, you know, kind of earnings and free cash flows at companies on average are about 30% higher than they were then. Substantially less leverage, and frankly, the accounting standards in a post-Enron world, despite the fact that FASB and the accounting standing centers get berated all the time, I think are significantly better than they were at that point in time. So you could easily make an argument that there's a lot of equity upside here from this, aberration or panic selling that we had that reached the crescendo back in early March.
And the most important economic statistics from my perspective in trying to clarify what the future is going to look like here is when you take a look at the corporate sector, just take a look at productivity numbers in the fourth quarter of last year and the first quarter of this year. They were truly extraordinary. In a typical recession, what happens is demand falls off a cliff, which it did, and by the time corporations catch up to that and shed labor, it's already passed. And you see horrible productivity numbers during recessions, which makes a lot of sense. We've had spectacular productivity numbers during this recession. And what it tells me is that corporations are doing a better and better job at getting ahead of the cycle, that their mobility is better, their ability to move quickly and reduce costs as need be is better. And that just gives me confidence that the future is quite bright for corporations, not only in America, but frankly, really around the world. People have learned how to generate earnings better than they did many, many years ago. We see that with flying colors in the emerging world. That's not going away. China, because of all the things we talked about, will continue to be a growth story. Everybody who touches China will benefit from that. And as I take a look over the next 3 to 5 years, again, the Armageddon scenario is no longer on the table. The question is whether things are so good that we run into some central bank policy issues. But I don't think that's going to happen for the next 12 to 24 months. So on balance, I'm positive about equities. On balance, I'm quite positive about credit. I think credit is going to continue to improve here. Anything that's improved as much as credit has so far this year, you have to be a little bit careful. You could have a correction. But looking out over the next 12 to 24 months, I think that's a wonderful area for people to put their money in.
What was your best performing asset class?
Foreign exchange.
What was yours?
You're a pretty optimistic guy, Larry.
On the margin, I am. That's right.
What was your best performing asset class?
Well, it's hard not to have had some of your best performance in commodities, given not only the move in the market, but the volatility in those markets.
We only have a couple of minutes left. Is there anything we did not cover that you are dying to tell this audience? We covered a lot.
Well, I think the one thing I'd conclude with is maybe what I touched on at the outset is I would think long and hard about each of your firm's business proposition and what is it of value that you're really performing. What's your target customer and what problems are they trying to solve, and how can you expand, in addition to just producing returns, expand your value proposition to them.